if you had anything good questions, repeat them.
Chase turned 400,000 into 40 million with Bitcoin.
Honestly, that, it's funny. It's not. I think that's almost like the problem now. It's like so much of crypto doesn't seem believable. And it's like, I have this conversation all the time. Like I always get on my parents a lot and my grandparents. My grandparents are deceased now, but I used to always, tell my grandfather, I was like, you couldn't just have bought land like once upon a time. Like it was so cheap. I wouldn't have to work. I wouldn't have to do anything. And, it's like you always wish for that next once in a lifetime generation, type of opportunity. And, .com boom, I mean, I didn't catch that. I caught kind of the tail end of it, but not anything material. And you always kind of think, I wish I would have done this. I wish I would have done that. And life continues to give people those opportunities. And what do we do every time we have one of those opportunities? We ignore it. And then we always go, I wish I would have done that. So 5-10 years from now, people will be like, I wish I would have just, learned more or bought into it or gotten involved. And it's going to change, right? It's going to be, it might not even be blockchain. There might be some other digital ledger type of capability that comes out, but this is the precursor of it. Who knows what's MySpace versus Facebook, but when you see people making the kind of money that people are making on crypto, it lends this like distrust to it. And it's like, so it's such a weird catch-22 where you're like, I really want to make a lot of money and I want to retire early. And then other people make a lot of money and retire early and like, it's a scam. And you're like, oh God, we live in a very cynical world. And it's just numbers and it's just getting in early enough and it's time and opportunity. And I think, it's so early. People always think, the ship has sailed. And for one of these days, I'll push it back out. But I built this graphic around last November when things started to kind of ramp up. And when you look at your y-axis kind of up to like, say, $1 trillion, it does start to look like, the line was going up. And it's like, oh man, we're really moving here. Did we hit the S curve? It's gone vertical. But then if you, back it back down and your y-axis is 10 trillion or 20 trillion, the little line, you can't even see it. It looks like a flat line. It goes, doot. And like, that's the perspective that people have to have on this. You had the .com boom, which I think topped out at like 3 trillion. And then the crash, erased about half of that. About 1.5 trillion kind of came out of that. And so now, I don't think anybody, if you talk to any, economist or anybody in finance or anybody kind of that really understands, blockchain, crypto's being built on it, or just the industry at whole, there's not a single person who thinks this thing is going to top out at, 3 trillion. I mean, this is a 5, 10, 15 trillion easy. And so, the amount of money you can kind of make, and just the impact that you can have it's incredible, and I think it scares people. They think like, I don't know, what to make of this. It doesn't seem like real life that you can make that kind of money. But if you look back, I don't have it now, but if you look back, 1998 to 2008. Check Amazon prices. I mean, they were literally, Amazon went from like 94 to 6. It was like from 50 to 30, 100 to 60. It literally about $100. Between $5 and $100, it dropped like 4 times, like over 60%. And who wouldn't go back and buy Amazon right now at anything under 100? And it's like, people, they're so quick to forget history, and it's just numbers. And then when you think about, let's say Bitcoin does continue to be kind of the leader and kind of the indicator of the entire crypto blockchain space, it's mathematically impossible for it not to continue to increase in price just to consume the amount of money that's required to get this industry to $1 trillion, $2 trillion, $3 trillion, $4 trillion. I mean, that's the beauty of kind of how it was designed. When you have that kind of scarcity and you have a limited supply, the price has to go up. It's not silly, it's not stupid, it's not impossible. It literally mathematically has to do that, and then we just deal in fractions. And so I always tell people, like, even if you don't want to invest, that's why it's so important to be a part of these kind of things, is just coming to these things and learning and actually just asking the right questions and hearing from people. Like, I get inspired at these things all the time. Like, I know a small amount and I'm constantly trying to know more, so that when those opportunities do come up, I have a framework to kind of assess them and a framework to understand them. And that's kind of, I want this to be more of a conversation, but it's kind of how I approach investing in general, and it's my background. So I'll give you my background and kind of why this is called, how to invest like a VC and how that applies applies to what I do in crypto, but it's like, that's what I'm looking for. I'm looking for 400,000 to 40 million. I mean, that's what venture capitalists, that's the entire industry is built upon, is looking for those kind of home runs, diamonds in the rough, nobody sees it coming, and when by the time it gets big, you were in so early, so big that, you know, it's truly meaningful returns. So real quick, we'll let a couple other people come in. What else yesterday struck you? It'll kind of inform this talk a little bit. Somebody be brave. Oh, now you're talking my language. So he said security tokens. Kind of what struck you about that?
Well, everybody's focused primarily with real estate, right? Like that's like the first mover, but there's some very interesting things talking about, like securitizing debt, art, movies. It starts feeling a little bit Blade Runner-ish.
Yeah, man. I love that you said that, because I think that's one of those things. Even when you have this massive pattern of cryptocurrency and Bitcoin and all of this stuff happening, that you think, oh man, maybe I missed the boat. That's going to keep happening, And so a good example, and I want to touch on this for a second, then I'll get kind of back to where we're going to start. I get in the habit of saying, kind of RIP ICO, hello STO. So for those of you who don't know, ICO is an initial coin offering. That's what you saw over the last 18 months. I mean, it's what you've seen since that kind of the beginning, but you saw it really kind of catch a frenzied pitch over the last, let's say 18 months. Billions of dollars raised, massive gold rush. And really what was happening is you had a lot of, what I would call entrepreneurs not really wanting to build a company, not wanting to go to VCs, probably couldn't raise money from real investors. And then they went to the public and said, oh, this is way easier. It was crowdfunding on steroids. No rights, no protections, no questions, no due diligence. Just give me your money and I'm going to give you an IOU. But that IOU has an asterisk. I may or may not give it to you. And so what a crazy world. Like no accredited investor would ever even bother. I didn't lose any money on ICOs. I mean, I just so many of them were clearly either fraudulent or they're going to be failed companies outright. And that's what ended up happening. 70 to 80% of those companies that raised money through an ICO, they're either gone because they were a scam or they're gone because they failed. Because when you have, your buddy in New York call up a developer in Shangri-La and link up with somebody in Colombia and say, hey, let's throw up a white paper and a website and then raise some money, and then you realize building a business is hard, and you think, I don't want to do it. There's no recourse. They're like, see ya. And some of these websites were just shut down, and some of them were creatively shut down. And so, I think there'll be a flight to quality now. So if you're watching, think about what happened there. Ethereum, Ethereum in and of itself is an incredible platform because of what you can do with it. Ether was only, that price was kind of driven up artificially because people wanted to invest in ICOs, and you needed a lot of Ethereum to invest in ICOs. Were people really buying Ethereum to use it, for the platform? Not really. You have gas issues, but that's marginal. You're really looking to gamble. It's online poker at a global scale. And so you see this, crazy rise in Ethereum. So now this will be part of this kind of talk on how to think like a VC. What's next? So now if I have a thesis that we're still going to need to raise money and we're still going to need platforms to do it, because not everybody's going to build their own blockchain. It's why I have a very large position in Stellar. So Stellar is actually positioning itself to be the next kind of Ethereum run. Like, let's figure out how to do security tokens. Let's build an ecosystem that's tied to alternative trading systems, has a rules engine that can mandate certain rules that are pursuant to securities regulations. And let's kind of see what the next wave of credible quality fundraisers look like. And that's why I've gotten a habit of saying the next wave of kind of blockchain, cryptocurrency, whatever you want to call it, is real companies launching compliant cryptocurrencies with a real actual use case, not utility, but it has utility, but utility token as a concept is kind of naive, backed by real teams with real experience. And so as you think about the rise of security tokens, what is going to be the platform that underpins understands that. Now, Ethereum will be really, really good at complex contracts. So if you can imagine it, Ethereum is the platform that, is very complex, very deep, trying to understand, not necessarily commercial grade applications, but if you're talking consumer facing that requires high volume, high throughput, gas would kill most of those. Like we have one with Funcoin that, we looked at pretty much everything, and Stellar can't even keep up with our volume, but it's the closest thing that they have right now that will. And so we have to kind of launch on them. You can't have a CryptoKitties moment if you're a large Fortune 100 brand with a lot of consumers. Most technology hasn't gotten to the point where they can sustain that. So, as you kind of think like a VC, think about where the market's headed. Don't wait for, I like to build my positions when kind of no one's looking, and kind of understanding, okay, mass psychology, where's the market headed, what's going to be necessary, what's going to be needed, where are the opportunities. If you have this huge issue with things like CryptoKitties choking, a certain blockchain technology because it is so complex, and you have this gas issue where you can't do a lot of high volume, what's going to be the alternative for that for now? Now, that doesn't mean Ethereum's dead. I start to look at things like, Omizigo and how they're trying to do plasma integration. Ethereum's not just sitting there going, oh, gee whiz, I guess we're screwed. They're going to try to make that into something that can do, off-chain scaling and stuff like that. And I think they'll ultimately do it. It just depends on how quickly they'll be able to prove out that model. So I love, so many people, I guess, and this will kind of start this talk, so many people are just looking at price, charts, Reddit, and news. And it's literally what we do in kind of the political sphere. It's just like we don't really actually bother learning about anybody's agenda, anybody's platform, what they're actually doing. We just wait for someone to tell us what to do. And then maybe we Google it, and maybe we get some soundbite, or maybe something comes on Twitter, and they're like, oh, yeah. And inevitably, you're always a day late, probably more than $1 short. And it's why unfortunately, a lot of unaccredited investors and people new to crypto, even if they are accredited, end up losing a lot of money. And that's actually so counterproductive to this whole thing that we're trying to build here. Before I was a VC, I was kind of really involved in angel investing. And it was so important for me to get angels into really good deals, because if they got into really bad deals right out of the gate, they would just be like, screw this, and they would go back to doing something else. And so you want people to have a good experience. People are going to lose, but you kind of want to lose fairly. You don't want to have that moment where you're chasing the hype, chasing the FOMO. It's like, honestly, December probably set us back. I mean, because everybody jumped in, everybody's like, woo! And like everyone that was, that knew kind of crypto has been around for more than a minute knows that Q1 and Q2 kind of sucks, regardless of how good the market is. And unfortunately, we had this just frenzy, and Bitcoin should have probably never been at 20,000. But the mass psychology took over, and so now we kind of got to get people, comfortable again. Like, now everybody's kind of a little bit tensed up and doesn't know exactly what this next kind of move is going to look like. But I think we'll get there. And it starts with places like this, getting educated and really understanding kind of, what it is you're getting involved in and why. And I think that's why I like, investing like a VC, because at the end of the day, you're holding your own investments. You're not, you can't, so many people blame other people. You told me to buy it. You didn't tell me to sell it. Like, nobody told you anything. You hit the button. It's your money. You're ultimately responsible for it. So you should have a certain faith in what you do. Like, I won't invest in something that I'm not willing to hold for more than a year. And for me, I normally hold much longer than that. But I have to be willing to believe that they can get there and that they're not going to go away. And so many things are really fly by night. People who do not have the experience to day trade, but they are day trading, and they're just like selling, buying. And so I tell people, especially in the crypto watch, I'm like, if you find yourself rushing to a computer and frantically trying to log in, stop whatever you're doing, walk your dog, and come back to it in a day or two, because you're going to probably make a mistake. I mean, every time you think that you're going to be you're going to race and beat a market, you've already kind of failed. You should have either, I don't really do stop losses, but you should have had a stop loss in place. You should have had a plan in place. Where are your entries? Where are your exits? You should have thought through it, and what is okay for you. I made a lot on Ripple last year because I fundamentally believe in the VC mindset. Ripple's totally polarizing. It might not even be crypto. I get all that. I don't even care. It's listed on crypto exchanges. There's liquidity, and I know for a fact a lot of the people who are behind it, and they are the Silicon Valley elite. Look, the Silicon Valley elite don't make a habit of losing a lot, and they have perfected insider trading at like a global scale. It's the same VCs and the same investment bankers and the same companies going public, and they just wash, rinse, repeat, and it just goes around and around and around. So if you think that like Ripple is going to fail, you are sorely mistaken. But I also invest heavily in Stellar, so I don't pick or choose. One is way more decentralized than the other. One is absolutely influenced by a central authority. But look, Apple is probably the greatest example of a central authority. That was Steve Jobs, and when he came back in '97 and set them on a different path, he was a little bit of a megalomaniac, and that's probably what allowed them to achieve what they achieved. And so, decentralization I take with a little bit of a grain of salt, because sometimes that's just entrepreneurial anarchy, and nobody really has any strategy or any focus or any marketing or any concept of kind of how they want to move the ball forward, and that scares me as an investor. So let me pause for a second and go back to kind of my background, and then we'll kind of talk about how I approach kind of crypto investing, and then I really want to just have some more questions and thoughts. So, born and raised in Austin, ended up going to West Point, did the military thing for a while, got out of that, and then really just started starting a variety of companies, angel investing. I think I always wanted to learn the investment side of the game to be a better entrepreneur. It's the old military adage, kind of know your enemy. Ended up falling in love with it. There's a bunch of different problems, bunch of different solutions, bunch of different entrepreneurs, bunch of different egos, and I think inherently I had to admit that was probably ADD and didn't want just one company. And so spent about a little over a decade as a VC, a lot of that in kind of healthcare tech. So how do you leverage technology to inherently scale an inefficient industry? And so a lot of tech-enabled health services, a lot of health IT, and our healthcare industry is totally jacked. And so there's a lot of opportunity for technology to improve it. And so when you're dealing a lot with technology, you deal a lot with engineers, and engineers love new technology. And so early on, kind of got familiar with this idea of Bitcoin and cryptocurrency and the impacts that it could have. Started another venture fund solely focused on real companies leveraging blockchain to potentially do something within their industry. And then, really kind of just missed the game, missed being with a company. As a VC, you're kind of constantly the middleman, and so you're always pandering to limited partners, raising money, you're always investing money, and you're not really driving the car. You're kind of you probably should be sitting in the back seat. Sometimes you got to ride shotgun, but if you're grabbing the wheel, you probably made the wrong investment. I tried to invest in really good entrepreneurs that kind of knew what they were doing and where their vision was. So you're kind of just you're there as an advisor, and that gets kind of boring after a while. So my last major investment was actually in the company I'm in now, was a company called Funware in Austin. And really went into it thinking I just wanted to invest because I was talking to them about launching a unique cryptocurrency called Funcoin. And so invested, ended up having an opportunity to join them as COO when the old COO needed to step away for some personal health reasons. And so now kind of my day-to-day life is taking Funware, ideally, knock on wood, we filed a registration statement with the SEC to go public on NASDAQ. We launched an initial coin offering, actually a security token offering, because I guess I said this yesterday, we're kind of glutton for punishment. I think we will go down in history as the first company to ever simultaneously launch a registration statement to list on a public stock exchange while taking launching a coin offering. So a lot of lawyers, a lot of auditors, a lot of complexity, but it's an exciting time because a lot of people are trying to figure out how to not deal with the U.S. I think that's absolutely the wrong answer. Figure out how to work with the U.S. and figure out just how to do it compliantly. And the reality is, that kind of is why it's so important to think like a VC when you're investing in crypto, is because it's so much more than the price of a coin or a price of a token or the general sentiment of the mob. You really have to understand what is the company behind it, if there even is one. I cringe, and we spent about, I don't know, especially our CEO, I think it was ended up being pretty much most of the summer in Asia. And literally they always just talk about crypto projects. What's your project? Tell me about your project. I'm like, what's a project? I invest in companies, and more importantly, I invest in people. I invest in people behind the companies. I've never given a dollar, even in crypto, to somebody who I haven't spoken to at least live on the phone before. And so pretty much every major position I have, I have a direct relationship with either the founders or kind of the lead developers of that project. And I'm not special. Anybody in this room can do that. I'm shocked at how open the crypto sphere is when it comes to just wanting to talk about their projects, because it's so early. Like, we're literally, if you're thinking about crossing the chasm, we're literally at innovator status right now. And so everybody wants to talk about what they're doing. Like, you want me to talk about like Funcoin and Funware? I'll talk all day long about that because I'm passionate about it. I'm excited about it. You want me to talk about the Crypto Watch and what we're doing to advance kind of education and onboard mainstream into kind of the crypto universe without, maybe making some of the mistakes a lot of us have made that have been in it for a while? I'll talk about that all day long. So you can absolutely find access to, very important players in kind of the cryptocurrency world that will absolutely have a conversation with you and help you kind of think through your investment thesis and what you're doing and why you're doing it. So every company I invest in, I approach it kind of like a VC and not just what's the price. The price is a little bit arbitrary to me. I mean, here's a dirty little secret, especially as you follow people who think they know everything about crypto. If you just want to just make your own index fund and kind of invest in like the top 20, in 5 years, you will be up. Like, the prices are so low. And for those of you just coming in, I was talking earlier about like Amazon between 98 and 2008. So 10 years, the price just was like this between 100 and 5. Like at one point, I think I don't remember when it was, maybe 2004, it dropped from like 106 to like 6, or 104 to 6 or something. It was like a 94% just drop. And everybody's like, oh, it's dead. And I mean, now who wouldn't invest in Amazon at 106 or 4 or 6 or hell, 1,000? I mean, so, you have this opportunity to get involved at prices that are going to just be laughable. But I think the measure that a lot of people forget sometimes is quality of life. You don't want to live, if you're a day trader and you're good at that, then absolutely. If you're a quant and you understand how to do that well, absolutely. But for most people getting into crypto, you don't have either the time, the experience, or the wherewithal to day trade. And just, going to Investopedia or even on the Crypto Watch, like, we teach a lot, especially for the people in the brief. We try to teach, some basic, technical analysis, some of the things that we're doing. But I mean, I'll be honest with you, that's still probably not enough to really excel. And you also don't want to just wait for someone else that you really think has all the answers to say something and then just do what they do, because they're usually probably doing it a little bit faster or a little bit different than you, or maybe just a different amount of money and a different risk profile. So you have to really begin to cultivate your own investment thesis and your own philosophy and why you're investing in stuff, so that if you do lose, you can own it. But ideally, you win because you start to see things that maybe other people don't see. So, good example would be, we talked about this yesterday. And I think, for those of you that saw Steve Wozniak talk, he talked a little bit about, kind of Tesla and what was, kind of interesting about that, and why, having a Chevy or something else isn't as ubiquitous, because Tesla understood the infrastructure that was needed to have, to actually drive farther than just, downtown. And so he said, listen, I can't take a road trip somewhere in my Chevy Volt because, as I get to some max distance, there will not be, a recharge station for me. But with Tesla, there is. So, what Elon Musk understood at a very fundamental level as a leader, as a company, as an executive, was kind of distribution and infrastructure and ecosystem to support electric car. Yes, I can build an electric car, but if I'm not thinking about how the customer is actually going to use it, is it ever going to be pervasive enough to be adopted? And then, is it ever going to kind of be able to reach mainstream? I could have a really great car, but if there's no gas stations, what's the point? And so thinking through all that usually requires a company. And what I see a lot of times right now in kind of the cryptosphere is a lot of very smart people obsessed with their own tech, and they're not thinking about the customer at all. We had a conversation at Funware just recently about, as we kind of get ready to go public, what are we, how are we scaling? What are our needs? Especially as a lead, from a leadership perspective. And I hate the idea of a chief product officer. I just always have. I like the idea of a chief experience officer because it's just a different mindset. It's how does someone going to use this product? How, what does it matter to them? And so a good example of that would be, I like Lisk a lot. Lisk hit pause and said, do we want to really ask a whole world of engineers to learn an entirely new, language to be able to code to our blockchain or code to our side chains or be able to build dApps? Do we want to ask people to completely change their behavior? Or why don't we just do what everybody else is already familiar with? Let's build this, based on JavaScript. It's one of the most common programming languages there is. I mean, what a brilliant thing to think about when you're thinking, how do you drive mass adoption? We'll hire the blockchain developers, we'll hire the engineers, we'll do the back end, the complicated stuff. You just do what you've always done. It's the same problem I have with Brave Attention Token. That I love the idea. The team behind it is crackerjack, world class. I have a problem with asking people to choose a completely different browser. People on average have about 30 applications that they'll use on their phone that they'll actually keep. The rest are kind of one and done. You download it, you look at it, you uninstall it, you don't want it. And so asking people to stop doing this and do this instead is a huge, big question mark for me. So as I look at things to invest in, it's kind of, what is the strategy? I used to give a talk on kind of what it takes to drive mainstream adoption, and the Imperial College of London identified roughly 3 things. One, it needed to be a store of value. 2, it needed to be a medium of exchange, and 3, it needed to be a unit of account. And that's for me, very short-sighted. It doesn't touch upon awareness or distribution. And if you're dealing with any sort of kind of product that you actually want to get into the hands of the mainstream consumers, you have to be thinking through, how am I going to educate people about it? It usually costs millions, tens of millions, hundreds of millions to build a brand. Go talk to somebody in CPG or an alcohol company. I mean, you can have the best product in the world, and it takes millions of dollars and a lot of effort and a lot of thought just to tell people about it. Nothing sells itself. I mean, sorry, Mom, but sex doesn't even sell itself. You have to be able to convey your idea to people at a grand scale. And you even think about this. I mean, we're so egocentric around cryptocurrency today. We think that kind of like, everybody knows about it. And when I travel, it reminds me how early we really are and how very few people really know about it. So, and that's the entire industry, much less a specific company within it. So if you're going to invest in a specific company, you really got to think through, who are the people behind it? What is their strategy? How are they going to drive adoption? How are they going to drive, usage? So awareness and distribution are 2 huge components to what, I look for. So kind of going back to Lisk, the very fact that they have, a Lisk Academy or Lisk University or whatever they call it, that tells me something about how they think as a company. It tells me that they're thinking about, how do I build and foster a real ecosystem to help people on board into using my product. Now, they might still fail, who knows? But there are not, if you really dig under look under the hood for a lot of cryptocurrencies that are out there today, very few of them have, an org chart. That for me is step 1. Show me your org chart. Just the fact that, again, for those of you who are new, I don't care. I don't pick between Ripple and Stellar. I invest in them both. I hear all the arguments against, Ripple and why people hate it, but most people that hate it don't really know why they hate it. They just probably read it on Reddit. But the fact that they have a chief strategy officer, the fact that they have a CFO, the fact that they have, hundreds of employees, that matters to me. I'm not trying to, promote financial anarchy on a global scale. I don't approach cryptocurrency as an idealist. I think it absolutely is one of the single greatest innovations to impact the global economy since double entry accounting, but it's not gonna remove all these central authorities that are just part of our lives. The man has been the man for a long time. Governments aren't going anywhere. Banks aren't going anywhere. They will pivot into this just like they pivoted into gold or paper currency or whatever else. So I look at, if I'm, for the most part, if we're being honest with ourselves, most people are interested in cryptocurrency as an investment. If along the way we can make the world a better place, I think I'm trying to make the world a better place with giving people control back over their data. I think a lot of cryptocurrency projects can, bank the unbanked. I think we can help a lot of impoverished nations. But fundamentally, if we're being honest with ourselves, you are investing to generate a return. So invest as smart as possible. And so how do you do that? Invest in things where you have people living, breathing, and working at 24/7. This idea that you can just have a distributed, network of folks that are kind of voluntarily, working on the project when and if they can, but they probably have 3 other jobs. That doesn't work for me. You might be able to, and don't let price confuse you about building real value. Just because that price might spike here and there, that's this weird anomaly that has occurred in cryptocurrency. So for us, for Funcoin, we're not going to list on an exchange for a while. That's probably one of the dumbest mistakes I've ever seen any entrepreneur or wantrepreneur make. The only reason to list on an exchange is inherently counterintuitive to building real value for that company. And really, it's actually kind of almost arbitrary anyways, because if you ended up investing in a cryptocurrency, they listed on an exchange, and the founders sold all their cryptocurrency and everything that the company owned, you'd be like, what the hell? There's a reason why, like in the public stock exchange, you're locked up as founders, and you can't sell your shares because they don't want them just dumping shares and using it as a liquidity event. But in cryptocurrency, you have this weird dynamic where you have an ICO, the mob screams for you that the only way for you to achieve legitimacy and credibility is to list on Binance and Bittrex, but the mob doesn't care. The mob just wants to sell their discounted shares and dump the price. And so these entrepreneurs, they rush to try to pay off Binance or somebody else, or even worse, like list on a hit BTC or something. Then what happens? You list and it goes, just drops through the floor. So what you need to do, if you had a real company behind these things, you would delay that process. You would build value. You would actually be thoughtful about when and how you provided liquidity, because in the venture capital world, you don't have that ability. You have no liquidity whatsoever. You invest and you just take it to the house for 5 or 7 years, maybe longer, and just hope that one day you've built enough value that someone wants to buy your company, or that you're able to go public, or you maybe merge with somebody and you kind of keep it right and keep it going. But this idea that you should all of a sudden be given liquidity within months of investing in a startup is absurd. Everything in cryptocurrency right now is a startup, and raising money through an ICO is just another way to raise money. And a lot of these guys couldn't get money from a VC, they couldn't get money from angels, they couldn't get money from anywhere else. They certainly weren't getting a small business loan. And so they raised a bunch of money, through an ICO, and now what happens? It's not launch Gen 1, drive mainstream adoption, go make billions of dollars and do all these things. It's everything that you would normally do in any other sense that we've been doing in venture capital and angel investing for 50, 30, longer than that. It's go build, hire a team. It's, go start working on your product. It's what you hear in venture capital terms as use of funds. Here is what we're gonna actually do with the money we just raised. And that takes years. For me to hire a really good, talented person at Funware, it takes me 3 to 6 months. Easy. So if someone closes their ICO in May, and then, you demand progress in the summertime, that's bonkers to me. They have not made any progress, I guarantee you. Just to build, so Funware cut its teeth building mobile apps before mobile apps were cool. We built the first NFL app, the first NASCAR app. If you have Fox apps on your phone, we still continue to build and support everything Fox does. And so we know how to build very highly reliable commercial grade mobile applications. Just if you came to me to build your app, I would tell you probably 12 months to build it right. And so this idea that you're going to invest in a cryptocurrency and then all of a sudden they're going to turn around just a litany of partnerships and real world traction and all this stuff, it just doesn't happen in the real world. So crypto has to get more realistic with what we're doing here. This is your interval should be years. And if you want to learn how to do some TA and play with, I hear people say, I see a cup and handle on the 5-minute interval. Really? Okay. I mean, it's like if you're using 5-minute intervals on your charts to invest in crypto, I mean, have fun. I mean, it's fun, but I mean, it's not healthy, I don't think. And I think you're gonna probably pull your hair out and go crazy one day. I really only invest. I mean, you'll see me throw something out just for fun on an hourly, but I mean, for the most part, I look at everything as on a daily interval because my time horizon is multiple years. And so I think when you're thinking about crypto, just understand that it doesn't function the way it normally should. This mass psychology approach that people have don't correlate that with the value of the company. Because remember, the value of all of the coins of a cryptocurrency is somewhat disconnected from the value of the company. It's just a use of funds. And that's problematic in and of itself. Another thing I look for in a lot of companies is, have you raised money from real investors? So another one of my favorites, because I'm not anti-Ethereum, is Amizigo. I think Amizigo, if they can prove out plasma integration, will actually help save Ethereum. And so I think there's a lot of the Ethereum elite and people that were backing Ethereum that are now backing Amizigo, because it's a real company. They're not worried about pomp and circumstance. They're not on Twitter every 5 seconds. They're not trying to announce some major partnership, every other day. They're nose to the grindstone, head down, working on what they're doing, working on, real world partnerships, and they're bringing on real world investors. The Japanese firm they just brought on is absolutely meaningful. And so you think about in the venture capital world, when you're researching a company, it's called due diligence. And so you're really just understanding the company, you're understanding, everything about the people behind the company. And for me, on average, for 10 years as a VC, I think we calculated our normal average due diligence cycle was like 11.1 months. That's how long from the time I met an entrepreneur to the time I actually wrote them a check. And we were not spray and pray, VC shop. We would absolutely get to know the founders, go to dinner with them, go, spend a lot of time with them, get to know everybody they've ever worked with before. And so it's literally like being a PI and really understanding everything about them. So you know where all the bodies are buried, where all the skeletons are. If you can find investors like that are investing in certain projects, that's probably the only thing that I would say I've done a little bit that's maybe a little bit intellectually lazy, and sometimes that can be dangerous too. Just because they're in it, it must be good. Just because Kleiner Perkins invested, it must be good. And that's not always true too, but it's at least a nice leading indicator that there's something more there, because they have what's called a fiduciary duty to their investors. That's not all their money; it's a bunch of limited partner money, and they can't afford to be just investing in just random stuff and then hoping it works out. They at least have to do a little bit of research. They got to put out, investment thesis and understand why they invested and what they invested in. So if you have a cryptocurrency that did an ICO, or it didn't, but then you see that there's a lot of investors who have also invested, whether it's a Tim Draper, or whether it's a Wavemaker, or whether it's a Block Tower Capital, there's a lot of emerging groups, Pantera, that are absolutely, gaining kind of the experience and the credibility that if they do something, you should take notice. You should still do your own research. You should still learn about it. But absolutely, when you have those syndicates come together, that's something that I absolutely look for. I don't know that, I want to say, probably Mana is the only thing I've invested in that I didn't find an investor had already kind of invested in. And that's just because I think people love virtual things and they have a fantasy about kind of, Ready Player One. And I think that was my mass psychology play. And fortunately that paid off wildly, because I think people just get, excited and they fantasize about that kind of stuff. But other than that, but I still had an investment thesis. I knew why I was investing in it and why I was busting my own investment thesis to invest in that. And so as you think about things, think about the market. Is this, first think about why blockchain? Does blockchain even, impact what they're trying to do? Do they even need it? Do the people backing it, kind of what's the team? Do they, I start with team, do they have the requisite experience? Do they have the requisite access to the industry? Have they worked together before? Do they have any skin in the game? That's, very important. I mean, I don't think, crypto's a little different, but when I was investing for 10 years, I only invested in things where the founders were kind of like leveraged to the hilt. I mean, you want people who will just run through walls. If you told me to invest with an entrepreneur who, made millions of dollars as a hedge fund guy or girl, and they were putting in, a couple $100,000 to start a company, would I, match what they were putting in versus a teacher who, sold their house, leveraged leveraged, every credit card they could have, sold their parents, 401k. I would invest in the latter. I want people who are just all in if I'm going to invest my money. And so skin in the game is important, be it from the founders or be it from, kind of a personal network that they have involved. What do they have to lose? And so team, have they work together? Are they kind of, what is their walk away price? Can they just walk away from this? Do they have anything else going on? I won't invest in anything where the founders have like multiple projects. That's, one of my biggest issues with Stellar right now. They're a little bit diluted in what they're doing, but the platform itself and what they have done is enough to kind of, get me comfortable with that. Market, is there really a solution that you're actually solving? What's the so what of it all? And is it big enough to be meaningful? Can you build the product, or the solution? And is it going to deliver an experience that customers will not only, get educated on, but adopt? And then actually, can you drive not only just, innovator, early adopter stuff, but mainstream adoption? And then a lot of it's kind of financial health for me, so do you have the runway to get to where you're going? And that's what's scary right now, because you have this, the companies that have made it, the companies that did, have something that they can do, whatever they raised over the last, call it 12, 18 months, you have 60, 70% of that. So if you, basically looked at your runway and said, hey, I'm going to be able to do X, Y, and Z, well, you can do only 30% of X, Y, and Z. So now what are you doing to address that shortfall in capital? You better be raising from VCs. So if you couldn't raise from VCs in the beginning, and you raised, $10 million in Ethereum, and you fast forward, 12 months, and now you've got, $3 million or less, and you have, no access to VCs because you would have raised from them in the beginning. That's problematic for me. And so, you should be thinking about, do they have those relationships? What is their runway? What's their financial health? Can they see this through to fruition? And sometimes you can get that information. I mean, when we talk about, due diligence, you're thinking about what's your burn rate? What's your employees? How much money are you spending? How much money are you coming in? Are you generating any revenue? Are there partnerships that can kind of help you scale faster? Those things are important questions to ask before you invest. So don't fall into this trap of thinking just because there's an exchange and just because you see these charts that this is like the public stock exchange. It's not. It has none of the safeguards, none of the controls, and the companies are not nearly as high quality as companies that are public, and they never went through a lot of the gating items to get to that point. So don't feel comfort just because the ecosystem has built up this ability to buy and sell crypto as if they were stocks, because it's not true. And I think that's why a lot of people keep losing money. And I have a kind of a series I do on Crypto Watch a lot, where it's kind of what would whales do. And whales, I term that term more just influencers, people who have been around the game a little bit longer than most, and people kind of know what they're doing. They literally, it's just a game. I mean, I've been in conversations with these folks, and it's like, I've been in conversations with like literally live trades with some of these folks where it's, just, hey, let's do this, let's see what happens. And like, there's memes about this, there's videos that have been made about this, where they'll do a thing, and you look at a lot of these, like whether it's fake sell walls, fake buy walls, whether it's just, absolutely, you'll see these things like last January where an article is printed and it's, so-and-so is going to do something, crypto's dead, and it's like, the price just plummets, and then literally like 3 days later, it's like, oh, we got that wrong, that actually wasn't what happening, the government meant something different, but that's on like, it's on page 7, the retraction. And so manipulation of this entire market is very rampant, and so you have to kind of get into the mind of who really has, what's their best interest or not, what's their motivation? If you're reading an article, what's the motivation behind it? If you're seeing certain things get pushed out, what's the motivation behind it? Because a lot of these, what's interesting, the good thing about crypto is the high frequency traders and the algorithms are coming online, but they haven't really taken over the way they took over, kind of public stock markets where you just never beat them. Here, it's still a lot of mass psychology. It's kind of almost a pure movement of people and sentiment and feelings, and that's why you see these things like, buy the rumor, sell the news, and people, things usually kind of tank in Q1 and Q2, and these things keep happening. And if you hear someone that hey, we had a big announcement, it's always not a big announcement, and the price usually takes a hit. So, start learning these patterns now. For anyone in here who's not, how many people in here don't own any crypto at all, and they're just here to kind of learn? That's cool. Good. Kudos to you, and I think that's smart. Don't feel rushed. There is, again, the ship has not sailed. We are literally with machetes clearing a field to build a dock for a ship that'll be built one day, and then maybe it will sail, many years after that. So it is still so early. There is no rush. When people rush, they usually make mistakes. Wozniak said it. I mean, he's probably lying, but he said, I own 1 Bitcoin. That's enough to play with. Sure. Jamie Dimon doesn't own any Bitcoin either. So I think there's that's how a lot of us have been in space a while. That's how we learned. You just make a couple bets, learn, read everything you can. I don't prescribe like Oracle status or influencer status really to anyone. Good ideas, bad ideas. I like them all. It kind of helps me kind of build out my own thesis about what I want to do, because I want to own whatever I do. And so whether it's the Crypto Watch or well, there is no other really great group other than the Crypto Watch. But if there are any other great groups, let me know. No, there's a lot of really good resources out there to help you learn, but keep coming to these events and make it a point to network with people too, and really follow up with them and share ideas, because you really are the tip of the spear and kind of the vanguard for a lot of this stuff. We are so early that the relationships you build now, be it if you want to invest, or even if you want to start a company, or if you're a service provider, kind of building out the ecosystem, the relationships you build now, that's what made the venture capital industry so special. They did it, really in Silicon Valley, but you kind of have Silicon Hills and in Austin, you have Silicon Beach, Israel built on a world-class, kind of entrepreneurial innovation kind of ecosystem. And you can build that anywhere. It could be in your own hometown, just getting like-minded people together to kind of share ideas, share opportunities. Now's the opportunity to do that and be part of that kind of vanguard, because you get this reseeding effect that Silicon Valley is so famous for, where you just built this vibrant ecosystem of talent, investors, and opportunities and partners that just kind of recycled on itself. So be thinking about that wherever you are. And I'm going to shut up for a second. What time do we have? How much time do we have?
You have 15 minutes.
Cool. That's exactly where we wanted to be. Ask some questions, or give me some thoughts. Let's fire up some controversy. Hit me.
Okay. I come from a background where we did the internet. The scalability.
Hit you. There you go.
I have the experience of working during the internet boom. And so I was working on infrastructure, scalability issues, the whole thing. Operating systems, Oracle, SQL, all of the infrastructure that's going on. It's deja vu for me. This is unbelievable that what I'm seeing here, that this is going to be 1,000 times bigger. And we're the real crypto hollow gale of this whole thing is going to be with an application that goes beyond the actual infrastructure. And so those are the things that I've been working on. But it is unbelievable, the breakthrough that I've done combining blockchain, AI, and wireless charging. It is unbelievable, the breakthroughs that have come through over the last 6 months. So if you just think blockchain technology is all about currencies, bitcoins, the technology behind this is enormous. And I have the experience because I built out the infrastructure. Now, I love the companies that are building out the infrastructure, EOS, and a lot of the other companies that are doing this. They're laying the groundwork for me. It's like unbelievable. So based on all of my information, building out a protocol on top of this comes easy for me because I had to do it during the internet boom. So those are the kinds of things that are possible. There's going to be a few companies that are going to really succeed. We do a combination like Apple did. You know, they're a $1 trillion company. Well, they did a little bit of hardware, a little bit of application, and a little bit of operating system. That's the same thing what we're doing. It's that same combination, that ecosystem, that application, and that hardware that really is going to make the big difference. And we think we have it. But I don't want to brag about my company. But
you got to tell a story, and I think that's what you're talking about is important, because we have so much, I guess, respect and pride for the internet, right? So actually, I won't come on that. So the internet is, the fabric to disseminate information. Very cool, but I mean, we don't really know a whole lot of billionaires that, it's like, I own the internet. It really is. It was the things that were enabled by that were built on top of that. And there was a lot of breaking glass and breaking, pissing people off, and kind of, 1993 to kind of, the early 2000s before the bubble bust. I mean, that was a long time of just adding .com to something, and, all of a sudden valuations going through the roof. And that's going to happen again. So remember the lessons that were learned from that. I mean, there's going to be a lot of failures. There's going to be a lot of mistakes. There's going to be a lot of misinformation. But out of that, you look at what happened after the bubble burst. That's when people really started to see kind of the phoenix kind of rise from the ashes. The companies that understood how to either save people money, make people money. Google launching AdWords, and it kind of the epiphany came off that the internet could really be a business, and you started to see this rise of enterprise applications that then gave rise to really true consumer adoption. And so I think now, as you look at like blockchain, I mean, that's, instead of the dissemination of information, it's dissemination of value. And that's a much bigger idea. And I'll say it, it's a bigger idea than even the internet. The ability to disseminate value, be it, voter registration, patient records, document provenance, currencies, whatever it is, sky's the limit. And so, I couldn't be more excited about what's happening with, kind of, again, I don't say that the internet was the greatest innovation since the Medici's, commercialized double entry accounting. I think it's blockchain, or, some derivative thereof. So what other questions we got? Something good, or a point. Give me a something controversy. The one thing that Peter Thiel always talks about, politics aside, is what's your one non-consensus thought. So anybody, hit me. What do you got?
Yeah, so maybe controversy. So
hit me.
There's a lot of research about. So there's a lot of recently reported research about how VC is underperforming asset class. So can you shed your insights on that?
Man, I got some underperformers. I can't comment on just, I don't know what the statistics are, what the numbers are. I know that unfortunately, regardless of any devil's advocacy, you have an actual statistic that, the venture capital community as a whole probably contributes maybe roughly a third. The companies they've backed have contributed about a third of the US GDP, and possibly something similar, globally. So whether or not any individual, now that being said, probably where a lot of this does come from is, it's not even the 80-20 rule. It's probably more like 5-95. There are a very few VCs who, they have the lion's share of the returns, and they are absolutely the ones you kind of want to listen to and follow. And there's a lot of people who do lose their money. Now, the statistical relevancy of a lot of these reports gets a little muted because you have a lot of people that, technically are tracked, but probably, shouldn't be. They probably have no business being investors. You have a lot of celebrities getting involved and that are technically VCs now. Some do it well, like an Ashton Kutcher, who, regardless of what you think of him, I mean, he was very smart to use his celebrity to, influence, to get involved with VCs that did matter. Ron Conway is probably one of the most famous angel investors because his investment thesis is invest with really smart people. But then there's a lot of people that, Kanye West and others who, jump in, would probably be classified as a VC here and there, or have some firm that does certain investing, and then, they lose their hat on a lot of stuff, occasionally make some money. So I think it's hard to say. Honestly, I don't really care. Every opportunity I look at is N of one, and everything that I look at, when you kind of try to make a big generalization about any one group underperforming or overperforming, it's kind of like, what's really the point? Tell me an investor, and then I'll tell you whether they're underperforming underperforming or overperforming, and by looking at their portfolio. And that's what we kind of have to really look at. What is the discrete elements of that, data set, and then what are they doing, and what does it really matter to the decisions that we're making? But I agree. It kind of goes back to my earlier point about kind of Oracle status. Everybody can get it wrong. Everybody can get it right. Don't just blindly follow anyone, be it a VC, private equity, or otherwise. And oh, by the way, they have different motivations. The downside to VCs, and it's a really big downside, is misalignment. You have a lot of VCs who have 10-year funds. They have multiple funds they want to raise. And so, the danger for getting involved with a VC is absolutely that they may want you to exit faster. They may want you to move faster. You may lose control of your company outright. So it's not all gravy when you have a VC involved. It can kind of create a little bit of misalignment with the entrepreneurs as well, and I've seen that happen also. So you want to make sure, as a partner, as an investor, if it's a VC, an angel, or a friend, that you're really aligned around timeline, strategy, focus.
Thank you for all your input. In order to prevent the wrong approach to investors, like I have one of my targets he's worth $400 million. In order to prevent that burning of, I'm not an expert on it, what is your advice to, because I have a relationship with him for 19 years. I'm in the IT world. I'm a Microsoft partner. So what happened is some people, they have their heads all over the place, right? Everybody approaches them with all their sales approaches, right? Trying to sell their, come and invest with me. Yeah. What's your best advice in this industry? How should I approach these people? What's your best advice? What should I do?
Love that. That's a really good question. So, one, I think you got to know your company, know your numbers down pat. But I think you have that. So, the one thing that I look for. So, give me a little bit more context. So, you haven't pitched them at all yet? No. And do you have skin in the game yourself? Like, have you invested your own money in the deal?
No.
Okay. So, do you have any of your friends and family in the deal?
Friends.
Okay, so that, you might not be able to, right? And so, everybody kind of has different financial, where they are in their own kind of financial, journey is different. But you want to be, do you have anything else you're doing on? Is this full-time?
I do full-time IT training for advanced IT people.
Okay, so do you have a company, though, that you want to raise money for?
Co-owner, and we want to do a startup in this industry.
Are you will it be under the guise of the company you currently have, or will it be a new company?
I want to be heading it.
It'll be a new company?
Yeah.
Are you going to sell or merge your old company?
No.
Okay, so that's a problem. So as you're thinking about, so somebody with like $400 million, or as they think about things, especially if they're going to believe in you, if you have that relationship, they're backing you. So if you're going to say, so a good analogy was, I would always deal with this in the healthcare space with doctors. Doctors, that would come to me with really great ideas, and they'd be like, I want to start a company about this. And I'd be like, okay, great. Are you going to stop practicing medicine? No. Why? Is it not, if it's a great idea, then why would you not put everything you have behind that? I know that you can do both, but you can't do both well. And so I want you to be fully committed. And so a lot of investors will look at you and say, well, you just want to, play with the house's money. So if you have, an idea that you truly believe in and you want to go all in on, I would either make it a part of your total company, your total offering. Because if you're talking to me, I want the mothership. If you're involved in it, because I'm backing you, I want everything you're involved in. So, you create a subsidiary under your existing company. I want shares in the mothership. And that way, I don't worry about what you're doing. If you're working on this, working on that, I'll help you with strategy and we'll dial it in because I don't want you to be too diluted across your focus. But I don't want you working on something else that somebody else is going to get the benefit from, and I'm left, holding the bag over here. So consolidation is important when you're talking to investors because they're going to ask you that. They're going to ask, how much, do you have in the deal? And is this your only singular focus? And it's totally disingenuous because they want to invest in a bunch of different things. They want to have, a lot of diversity, but they want their entrepreneurs to be singularly focused on one thing. So I think that's probably your biggest shortfall beyond just real, true metrics. We're beyond kind of just being able to generate revenue, being able to generate traction. So that would be my next step. You got to get far enough down the road to actually show that there's something there. If you haven't already, sold a bunch of different companies and you're not kind of already on the inner circle, it's much harder to kind of have a PowerPoint and an idea and get somebody to invest in you. They want you to have already raised, I think on average, I mean, I was a very early stage investor, but even then, on average, the entrepreneurs I backed had already raised, $1 to $5 million. So they had already done the angel rounds. They had already cut their teeth getting friends and family involved. There were already people they had to answer to that if they failed, they were pissing somebody off. I'm not going to give somebody, money just out of the gate for an idea to then go start building it. Not that I don't like them and not that I don't like the idea, but just that the road to success is littered with ideas. Execution is your only great competitive advantage, because you're going to get, even if you have IP, it'll probably get knocked off. Even if you think you have something truly innovative, you're actually missing probably the competitors that you probably aren't even looking at right now that are going to try to eat your lunch. And there's a whole lot of obstacles and barriers to entry to even going into a market with a better solution. So I want to see that you got progress. I want to see that you're all in, and that whatever I invest in, that's all you and that's all you're doing. Does that make sense? What? In like the venture world? No. I mean, it's not a lot. Our average investment was about anywhere from like $2 to $5 million. Yeah, so we would do like kind of Series A, Series B. What other questions? Which is, it's a good point though, because it's a different mentality, So you have, for me, it was very meaningful, whereas you have a different mindset and a different perspective for the people that I know that are in private equity and kind of, the masters of the universe type finance, where it's like they won't even talk to you unless they're able to invest 25, 50 million. They have even a different kind of mindset in what they're looking for and what their, opportunities they are. So they'll have a different lens. So it kind of be how to invest like an angel, how to invest like a VC, how to invest like, a private equity master of the universe. Totally different in a lot of ways. So you got to be careful about who your audience is and what's important to them. What time we got? All right, one last question. Oh, wait, let's get to the new question. Shout it out.
We're a crypto venture capital from China.
Awesome.
In this bear market, I'm just wondering what you guys are kind of up to as a venture capital, and like what are the strategy, what are you guys doing, and like what are the different timelines and milestones you guys are hitting?
Yeah, good question. And I probably didn't say this right away, and I don't want to be disingenuous. So the venture capital firm that I had started to basically do blockchain investing, my last investment was in Funware. And so true to my own fashion, I don't do any more investing out of that firm, because I'm all in on Funware. And so the investing that I do now in crypto is personal investing in like little syndicates that I run that are just probably more like an angel. And so I don't do any formalized institutional venture capital investing today. And won't do it again until I'm no longer with Funware, which I may never no longer be with Funware, because I think we have a huge opportunity. But that being said, when I kind of think about venture capital in general, I mean, I don't think it changes. I don't think it's any different. So for instance, I don't even think I ever used the term it was a little over 10 years. So call it 12 years as an angel or a VC. I never even used the term bear market. I mean, when you have a 5 to 7 year, exit horizon for most of the things that you do, I mean, markets are cyclical and they'll come and go, and I don't even think about it. Now, that being said, if you're saying that as a venture shop, y'all are investing in crypto that actually has liquidity on exchanges, that's tougher. What are you telling LPs? Like, what's your is that what y'all are doing? Like actually buying, coins on an exchange and kind of, playing like kind of the Pantera? Like, are you getting any access to equity as well, or?
We get into like a wait and see way.
Okay, so you'll do equity and coins? Do you have different what are you telling your investors in terms of the coins?
Well, it's our partner's money, so we don't have.
All right, good. See, you just answered their question. That's even a better question. I mean, that's the danger of venture, is that if you are borrowing somebody else's money in order to do it, and that's what kind of traditional venture capital would be, then you run the real risk of having a misaligned incentive. And then I honestly don't know that anybody's even really cracked the code on the financial ramifications. There's a lot of laws around LPs having kind of phantom income and other things that kind of happen. I don't think, we talked about mainstream adoption yesterday, and one of the things we didn't touch upon was regulation. I think there's still a huge question mark in terms of, taxation and then just how things flow. I mean, people literally having to pay taxes on things that they don't have cash yet, on, that I think that's going to need to be worked out before people should really start taking, limited partner money to drive venture returns. I was the same way. It was largely people that I knew, friends and family, that we kind of built our fund around. It wasn't like endowments or anything like that. So when it comes to thresholds and milestones and what you're trying to do in terms of performance, I don't even think we've scratched the surface on getting an answer around that. The real secret is most of the VCs that I know, they're investing in equity and they're getting tokens kind of as a benefit. And that's kind of like the dirty little secret in crypto, that they're not actually going out on an exchange and buying a bunch of tokens. The rich people are rich for a reason. They hate to pay for stuff. So, all right, that's it. So, hey, thanks for coming out. Really appreciate it.